Most people live their entire lives believing money is something they own. We work for it, we save it, we spend it, we fear losing it. Yet, beneath the stability we think money represents lies a structure so ancient, so engineered, and so controlled that the average person never realizes they are not participating in a financial system, they are trapped inside one. This story doesn't begin with digital banking or modern Wall Street. It doesn't even start with the creation of the U.S. Federal Reserve in 1913. The roots stretch back thousands of years to the first organized civilizations, when money first evolved from simple barter to something far more dangerous, a tool of power. The earliest kingdoms didn't mint coins just to ease trade. They minted coins to control labor, collect taxes, and create a dependency between rulers and their subjects. The state created currency. The state demanded taxes in that same currency, and suddenly, every citizen needed government-issued money to survive. That concept never died. It evolved. It industrialized. And eventually, private families and institutions replaced kings. What we have today is not a free market. It is not democratic capitalism. It is not even national ownership. It is a hybrid system where governments borrow currency created by private institutions, while citizens compete over a supply of money they neither issue nor control. And if you follow the paper trail far enough, you find something unsettling. The people who control money aren't the people who use it. They are the ones who create it. But to understand the full scale of this illusion, you have to rewind to the moment when money stopped being physical and started being debt. Because that was the turning point when ownership shifted from nations to networks. Today, we tap screens, swipe cards, and watch numbers change in accounts. But those numbers aren't backed by gold, silver, or even government reserves. They are simply claims, promises created through lending, multiplied through credit, and recorded as digital entries in banking ledgers. More than 97% of all the money that exists today was created not by governments, but by commercial banks issuing loans. That means mortgages, credit cards, corporate bonds, student loans. Each one expands the money supply. Banks don't lend existing cash, they create new money the moment debt is issued. So ask yourself, if banks create money, if governments borrow that money, if citizens must repay it with interest, then who actually owns the world's money supply? Not the governments who spend it, not the workers who earn it, not the citizens who save it. Ownership belongs to the institutions that issue currency, set interest rates, design debt instruments, and decide when credit expands and when it collapses. This power is not centralized in one country, not in the White House, not even in the Federal Reserve alone. It is distributed through a global network of central banks, private institutions, supranational lenders, sovereign wealth funds, and financial families whose influence transcends borders, elections, and media narratives. They don't run governments. Governments run on their terms. Money is not just a medium of exchange. It's a system of control, and that system has been engineered to appear natural, even inevitable, so no one bothers to question it. But behind the screens, the vaults, the policies, and the headlines is a deeper truth. The world doesn't run on money. It runs on debt. And whoever controls the creation of debt controls the future of nations. This raises a disturbing question. If money is created from debt, and that debt must always be repaid with more money than exists, then who is the world permanently indebted to? The answer leads to the largest financial transformation in modern history, one that began not in 2008, not in 1971, but centuries earlier, when private power replaced monarchs as the architects of monetary systems. This shift wasn't accidental. It was strategic, refined through wars, collapses, treaties, and crises. And today, we stand at the final stage where physical currency disappears, digital systems evolve, and control becomes absolute. You are not just living in a financial system. You are living in the latest evolution of a deeply engineered hierarchy of ownership, one where money is merely the visible layer. To understand who truly controls it, you must peel back the history that governments never teach, banks never explain, and economists dismiss as conspiracy. That's what we do here. Welcome to Finance Dude, where we uncover the hidden architecture of global money and expose the forces shaping your economic future without your consent. And in the next scene, we trace the origins of this power to the era when empires realized armies alone couldn't rule the world, but finance could. Because control isn't taken by force, it's taken by debt, interest, and perpetual scarcity, and we are still living under that system today. History remembers empires by the wars they fought, the borders they drew, and the kings who ruled them. But history rarely tells the story of how those empires paid for themselves, and how their power wasn't sustained by swords or soldiers, but by a new kind of weapon: financial engineering. Empires rise when they can afford expansion. Empires fall when they can no longer pay for their power. This is the part most people miss. To understand who controls the world's money supply today, you have to return to the moment when wealth stopped flowing from land and resources and began flowing from credit. It began quietly in medieval Europe, when merchants realized that physical gold was too heavy to move across dangerous trade routes. So instead of transporting coins, they issued paper promissory notes, backed by gold stored in vaults. These notes were easier to move, easier to exchange, and far easier to multiply. A gold coin can only be spent once. A paper claim on that coin can be issued many times over. That was the birth of fractional reserve banking, the idea that financial claims can exceed physical reality. At first, this seemed like innovation. Trade flourished, wealth accelerated, but behind the scenes, a shocking discovery emerged: whoever controlled the issuance of credit controlled the economy itself. This realization did not go unnoticed. Royal families needed armies. Empires needed war funding. Nations needed reconstruction after conflict. But armies are expensive. Battles drain reserves. Gold runs out. So kingdoms began borrowing money from private financiers. Families whose influence stretched beyond borders, beyond monarchies, beyond loyalty to any single nation. These weren't governments financing wars. These were financial dynasties renting power to governments. And when governments failed to repay, the lenders didn't lose, they demanded land, trade privileges, interest concessions, or direct influence over policy. Debt became political leverage. The shift was irreversible. From the Napoleonic Wars to the rise of the British Empire, from colonial trade routes to industrial expansion, private finance became the true engine of global power. The world map wasn't drawn by armies alone, it was written in ledgers. By the late 19th century, an uncomfortable pattern had emerged. Countries could go bankrupt. Private lenders could not. Nations rose and fell. Empires collapsed and rebuilt. But the creditors remained. Still, the most dramatic evolution came in the early 20th century, when global finance transitioned from private families influencing nations to central banks governing entire populations. And nowhere was this transformation more profound than in 1913, the year the United States created the Federal Reserve. People assume the Federal Reserve is a government agency. It is not. It is a hybrid institution, privately influenced, controlling issuance of the world's dominant reserve currency, the US dollar. The American public doesn't vote for it. Congress doesn't print money. The Treasury doesn't control interest rates. The world's most powerful currency is managed by a central banking network that answers to markets rather than citizens. And once the dollar became the backbone of international trade, especially after World War II, countries no longer needed gold to back their money. They needed dollars. The world became dependent not on the United States itself, but on the institutions that issue American money. That dependence deepened when President Nixon ended the gold standard in 1971, severing currency from physical backing forever. From that day forward, money became purely conceptual, backed not by by resources, but by trust and debt. And when money is debt, the most powerful institutions in the world are not governments. They are lenders. Commercial banks create money through loans. Central banks control the cost of that money through interest. Global institutions enforce repayment through international policy. This system is so deeply embedded that most people never question it. They don't ask why countries like Argentina, Greece, and Sri Lanka collapse while their creditors remain untouched. They don't question why every nation, including the United States, is permanently in debt. They don't realize wars, pandemics, infrastructure, recessions, elections, and social programs are all funded through borrowed currency. And that means whoever controls the debt controls the future. But here is the part almost no one sees. The system is now evolving into something even more powerful. Digital currencies are replacing banknotes. Cash is disappearing. Credit scores are becoming identity systems. Money supply is becoming programmable, and the institutions that once influenced nations from the shadows may soon have the ability to influence individuals directly, not through laws, not through politics, but through financial access itself. The final stage of monetary power isn't control of gold, banks, or reserves. It is control of permission. Who can buy, who can sell, who can participate in the system. And that leads us to a new question, one far more personal than geopolitics. If money is digitized, if transactions are monitored, if access can be granted or revoked, then who controls you? In the next scene, we reveal the modern power structure, the institutions, alliances, and financial systems that quietly govern the world economy today, and the emerging players preparing to replace them. Because empires no longer rise through war, they rise through monetary architecture. If history taught us anything, it's that power doesn't disappear, it relocates. The monarchs of ancient empires lost power to private financiers. Private financiers surrendered dominance to central banks. Central banks gained leverage through global reserve currencies. But today, a new transfer of power is unfolding quietly, rapidly, and largely unnoticed. Because for the first time in history, money creation is no longer controlled by a single layer of institutions. It has splintered into multiple competing power centers, each shaping the economic future in its own way. The modern world is not ruled by one empire. It is ruled by three overlapping financial architectures: the central banking system, the institutional capital empire, and the digital currency revolution. These forces do not work together. They collide, compete, and evolve, sometimes in public, often behind closed doors. And together, they determine who controls the world's money next. 1. The central banking system, the visible rulers. At the top of the traditional financial pyramid sit the central banks, the Federal Reserve, the European Central Bank, the Bank of England, the Bank of Japan, and dozens more. These institutions don't just regulate money, they create its conditions. They decide how expensive debt is, how fast economies grow, when inflation rises, and when recessions are allowed to happen. Their power is not democratic, it's mechanical. No matter who wins an election, monetary policy continues on its own timeline. And because most global trade is still denominated in dollars, the Federal Reserve acts as the central bank of the world, shaping the economic fate of countries that never cast a vote for it. But the central banks do not operate alone. They are sustained strategically by a second force. 2. The institutional capital empire, private power without public accountability. These are the institutions that manage and allocate global wealth. BlackRock, Vanguard, State Street, J.P. Morgan, UBS, Citadel, Bridgewater, Saudi, and Norwegian sovereign wealth funds, BIS, IMF, World Bank. They don't print money, they deploy it. And deployment is where influence becomes control. When these institutions buy government bonds, they determine which nations stay solvent. When they pull investment, economies collapse. When they buy corporate stocks, they influence entire industries. Three of them, BlackRock, Vanguard, and State Street, collectively own majority stakes in thousands of global companies across defense, energy, media, and banking. They are not governments. They are not elected, yet they shape policy, markets, and public perception. Their power is not based on laws or armies. It's based on allocation. Who gets funding? Who gets denied? Who is allowed to grow? Money doesn't just flow, it is directed. But something unprecedented is now threatening both central banks and institutional capital: a system where money doesn't need permission from either. 3. The digital currency revolution, the coming fragmentation. For most of human history, money needed intermediaries, banks, vaults, clearing houses, treasuries, lenders, regulators. But digital money breaks that dependency. And this revolution has 3 branches of its own: decentralized cryptocurrencies. Bitcoin, Ethereum, and others are not controlled by governments or banks. They create monetary value through community consensus, not institutional approval. To central banks, this is not innovation, it is rebellion. B. Central bank digital currencies, CBSES. Nations are responding by creating digital money of their own, but with total traceability and control, not just issued by governments, but programmed by them. This could enable instant taxation, real-time stimulus, blacklisting of purchases, automatic fines, and expiring money. This is not currency, it's control infrastructure. C. Corporate currencies. Tech giants like Apple, Amazon, and Tencent already operate ecosystems where traditional money is optional. Their endgame isn't payments, it's economic sovereignty. And when a corporation controls both identity and currency, it becomes a micronation with borders made of code. The battle for monetary dominance has already begun. Central banks want a controlled transition into programmable national currencies. Institutional giants want open markets where they remain the gatekeepers. Crypto networks want a world where no one controls money at all. Governments want sovereignty. Corporations want ecosystems. Citizens want freedom. But history is clear. Money is never just technology. It's power, and power never decentralizes willingly. We are now watching a silent war over the next global reserve system, a war not of armies, but architectures. Not bullets, algorithms. Not invasions, liquidity flows. Not treaties, digital standards. And the winner will decide what money means, who controls access, how wealth is stored, how nations rise and fall, and how individuals live. Because the true collapse isn't financial, it's structural, and it's already underway. In the next scene, we examine how this battle ends and what the final stage of money looks like for ordinary people. Because the future won't be defined by dollars, crypto, or gold. It will be defined by who controls permission. If money has always been a tool of power, then the ultimate form of money is not wealth, it is control over access to wealth. The world is moving toward a future where ownership isn't defined by what you can buy, but by what the system allows you to purchase, store, or transfer. And unlike past financial eras, this time control isn't enforced through banks, governments, or even currency itself. It's enforced through infrastructure. Because in the emerging financial world, money will no longer be a universal medium, it will be a conditional one, where access to transactions becomes the new border, and participation becomes the new passport. This is the final evolution of monetary power. A future where money isn't just digital, it's permissioned, programmable, and identity-linked. And the most unsettling truth is that this transformation is happening from all directions at once. The end of cash and the birth of identity-based finance. For centuries, money had one defining feature: anonymity. A coin carried no memory of who held it. A paper bill didn't need approval to change hands. Cash allowed private, unrecorded transactions. That world is disappearing. Every new system, CBSES, corporate ecosystems, private crypto wallets, removes anonymity as a feature of money. Instead, identity becomes integrated into the transaction itself. In this system, money doesn't confirm value. Money confirms permission. You can hold wealth, but be unable to spend it. You can spend, but only in approved ways. Your economic freedom becomes conditional. If cash gave citizens autonomy, its replacement does the opposite. The question is no longer who creates money. It becomes who authorizes transactions. And that is a far more dangerous form of power. Ownership without control. The new financial trap in the past. If governments printed too much money, inflation would weaken a currency. If banks failed, savings vanished. If empires collapsed, their coins became worthless. But the ownership of money itself, holding it, storing it, moving it remained in the hands of the individual. Not anymore. Digital money shifts control upward. Programmable money centralizes it. Identity-based money personalizes it. Imagine a world where your access to funds depends on social compliance. Loans adjust based on behavior data. Purchases are denied for risk scoring. Money expires if not spent in time. Wallets freeze automatically when policy shifts. Travel becomes conditional on financial profiles. This isn't speculation. These features already exist in pilot programs across multiple nations. The coming system doesn't simply track money, it governs citizens with economic levers instead of laws. The silent merge when power centers unite each financial faction. Central banks, institutions, crypto, corporate ecosystems claims to be building a better future. But if these systems interconnect rather than compete, the world enters the first truly global monetary authority. Not a one-world government, not a one-world currency, a one-world transaction protocol. The system that verifies identity, permissions, and economic access becomes the true seat of power, not the currency displayed on the balance screen. Nations may retain flags, corporations may retain brands, banks may retain customers, but beneath all of them, a unified infrastructure could regulate who may earn, who may save, who may invest, who may travel, who may exist economically. Power stops being visible, it becomes embedded, and that grants more control than any empire in human history. Because force intimidates, debt influences, but financial access commands. The individual's dilemma, freedom vs. participation. For the average person, the future won't feel like a dramatic collapse. It will feel like convenience. No more lost cash. Instant payments everywhere. No need for banks, cards, or paperwork. Personalized interest rates, automatic investment and taxes. Perfect economic efficiency. The trade-off? Freedom dissolves quietly in exchange for comfort. Most people won't resist. They won't even notice. They'll step into the system willingly, because the alternative will be exclusion, not from society, but from the economy itself. And in a world where life depends on participation, opting out becomes impossible. So who will own the world's money supply? Not a nation, not a bank, not a currency. The true owners of money will be the forces that control the rails, the invisible architecture through which all value flows. The final battle isn't about dollars vs. crypto or gold vs. digital assets. It is about centralized access vs. decentralized autonomy. The winners will determine whether citizens remain economic participants or economic subjects, whether money serves people or people serve money, whether the future is free or conditional, and that future is being built right now. Not in parliaments, not on trading floors, but in code. The world doesn't need a new currency. It needs a new definition of ownership. And the choice, if it still exists, will not be made by governments. It will be made by individuals, people like you.